At this point, I would like to make a few very brief comments about tax interventionism. Well, to begin with, the ideal of a neutral tax is impossible, because all taxes, remember the Latin coactio, coactionis, modify to a greater or a lesser extent the entire structure of income, valuations, relative prices, and so on. Traditionally, economists have aspired to the ideal of designing taxes or tax systems that are as neutral as possible. In other words, they have sought systems in which the introduction of a tax affects the allocation of resources as little as possible. To put it another way, the goal has been to introduce those taxes which least distort the market process driven by entrepreneurship. In principle, as Mises maintains, the state revenue required is relatively modest in a society in which the state is limited to properly defining and defending property rights. What is required is simply the revenue essential to financing the services of law enforcement, justice, defense, etc. And I repeat, that is a relatively modest amount in relation to the income generated by an unhampered market economy. The problem arises when the state begins to gradually take charge of broader and broader areas that traditionally were not its responsibility. In this way, costs tend to go up exponentially, and they end up becoming an almost intolerable burden. To give you an idea, on average, we all work for the state until practically the 31st of May. Some people might do so until the 30th of June. Only then can we start to work for ourselves. I am making this comparison to get across the idea that nearly 40% of all national income is absorbed by the public authorities, and the problem is not only the disproportionate increase in the areas in which the state is present. It is also that taxes are basically imposed on the capital, assets and income of entrepreneurs. That is, taxes are imposed on both profits and capital. You already know my reasoning. We have examined it together. We know that the well-being of the working classes depends on the workers raising their productivity. And workers can be increasingly productive only if they have available to them state-of-the-art capital equipment, which is increasingly plentiful, well invested, and productive. Each worker, each one of us, is paid the discounted value of his marginal product. The more capital we have available to us, the more productive we are, and therefore the higher our wages will tend to be. That is why people earn more in the United States than in India. It is not that American workers are smarter or work more hours. It is that in the United States, workers use tractors, while in India they harvest rice virtually by hand and live near subsistence level. Therefore, what is essential and what society should foster is the accumulation of capital. Society must woo the capitalist. The only way to fight poverty is to champion capitalists and make them earn money. No matter how much money a capitalist has, he cannot eat 10 steaks or have 1,000 Rolls-Royces. There is no doubt that he will ultimately have a higher standard of living than his fellow human beings, but the vast majority of his income will be invested. In what? In buildings and capital equipment made available to workers through companies. This increases workers' productivity, and thus their wages, and it drives up the standard of living. If the tax system levies a tax on capital, such as a wealth tax, which in Spain was temporarily abolished in 2008, or an inheritance tax, imagine someone passes away and the state takes 30% of what goes to the heirs. When such taxes are imposed, there is a process in which capital accumulation stagnates, and this process ultimately harms workers, because it makes them less productive than they could be. Taxes levied on entrepreneurial profits are also extremely harmful. As you already know, the market process is driven by the force of entrepreneurial creativity, and entrepreneurial profits are the signals which tell entrepreneurs where they should invest, just as losses tell them where they should disinvest. Well, if the system taxes entrepreneurial profits, progressively for instance, and the state takes 40 or 50% of what we earn, then it is as if those essential signals, the profits, become soiled or dirty. It is as if someone threw mud on traffic signals, and we drivers could not tell very well whether the light was green and we should proceed, or red and we should stop. That is the effect when profits are taxed. Profits are the essential signals, and if money is being made in a certain area, that means entrepreneurs should invest there. In areas where money is being lost, they should not invest. Well, if Papa State comes along and takes a substantial part of the profits, then those signals are distorted. The dynamic allocation of resources, which is driven by entrepreneurship, is severely distorted. Apart from this, the progressive tax system acts as a disincentive, because many people think, why should I put in the marginal effort of working if Papa State is going to take half of all I earn? If I accept the risks and I am successful, I have a partner, the state, who has a 40% interest. And if I end up losing money, I sustain all the losses myself, and I go bankrupt. Therefore, I am not going to embark on any further entrepreneurial projects. In circumstances like the current ones, in which we are coming out of a deep economic recession, and all economic agents, all households, families and companies, are trying to put their finances on a sound footing by reducing costs and paying off loans, we need as much disposable income as possible. If in such a situation VAT rates are raised, and capital gains taxes on real estate are raised, and so on, we are left with less leeway to sort out our finances. Furthermore, in the case of the increase in capital gains taxes on real estate, what is taxed is precisely the source of an improvement in workers' productivity, the accumulation of capital. So what would the ideal tax model be in an unhampered or a minimally hampered society? Well, this would be a society in which public expenditure would be very low, and hence taxes would be low as well, and in that sense they would not cause much distortion. From a fiscal standpoint, what is essential is that taxes never be imposed on wealth, nor on inheritances, nor in general on accumulated capital, for the reasons already indicated. Neither should taxes be imposed on entrepreneurial profits. From a theoretical standpoint, the ideal tax, which distorts the economy the least, is a single head or poll tax, because it is the most in keeping with the view of the public system as a sort of club. When you sign up for a club, like a sports club or a gym or a dance club, everyone pays the same fee. Yes or no? Well, the same would apply to the state. We are members of a club, the state, and we all pay the same membership fee to belong to the club. That is what least distorts the market process. It is called a poll tax or a single head tax. At certain points in history, such a tax has been in effect, and it is the most efficient type. And those of you who love the democratic ideal will be happy to know that a poll tax is also the most democratic type, because it would permit ad hoc decision-making from a democratic perspective, especially nowadays, when a vote could be taken in real time over the internet with the help of encryption systems. So, if any project were proposed, immediately the cost would be divided among the number of taxpayers, who would all have to pay the same amount in absolute terms. And you would see... Imagine, for instance, that the financing of a certain public work is being considered. Well, the cost is divided. How much will it be? So many billions. How many taxpayers are there? 20 million. Well, then each one must pay 300 euros. Who is in favor? You would see what the result would be. In many cases, if people detected the cost to their pocketbooks, they would act in time to curb many of the follies their politicians propose. And that is not to mention the financing of wars. Wars would be stopped in time. The popular outcry against them would be unbearable. In contrast, politicians currently have a strong interest in there being no clear connection between those who pay taxes and those who receive them. Everyone thinks college and social security and healthcare should be free, and that someone else should pay for them. Everybody wants somebody else to pay for those things, because there is a progressive tax system, and the rich pay for them. That is an illusion, and it conceals the relationship between cause and effect, and leads to the phenomenon we are used to, in which public spending rises dramatically. That is, the welfare state expands. And ultimately, no matter how much politicians insist on trying to hide the relationship between those who receive and those who pay, it is the middle classes who bear the tax cost. There is no way around it. Do the calculations. Look at what you pay for Social Security, and what your employers pay, which in the end you pay. Add to that what you pay in VAT, plus all other taxes. Do the addition, and it turns out that taxes account for over a third of your incomes. And I'm not referring to millionaire incomes, but to middle and lower middle incomes. A very substantial part of all we earn, between 40 and 40-something%, goes to taxes. As with any promise politicians make you, do not let yourselves be deceived. It is forcible taxation. Though it may appear you are going to get something for free, there is no such thing as a free lunch, as the Americans say. You are going to end up paying for it. There is a beautiful reading, a speech Ronald Reagan gave at the Juan March Foundation in Madrid on May the 7th, 1985. The speech is very important because Reagan explains his plan for tax reform in the United States. The tax system in the United States was practically expropriating. The tax burden reached 60%. The taxes on inheritances amounted to the expropriation of up to 80%. Reagan put an end to all of that. He brought about a tax reform based on reducing taxes. This was quite significant because it served as a model for all of the tax reforms in the rest of the world. These reforms have resulted in a lightening of the tax burden to some extent in almost all countries. The Reagan administration set that trend. Please read the speech Reagan gave here in Madrid, because it is priceless. Furthermore, it is based on the theory of entrepreneurship. I do not know who his speechwriter was. Reagan holds up Christopher Columbus as a model entrepreneur and alludes to all of the feats accomplished by Spanish people throughout history. And he points out that by reducing taxes, we stimulate the expansion of production.